Alright guys, we're back with another video looking over some dumb Instagram comments on trading reels and general trading related Instagram junk. We're gonna look at them, look at some of the comments, see what's going on, give my opinion, and yeah, break it all down. So, without further ado, let's roll the intro and let's get cracking. Alright, let's kick it off with the first one.
We just took out on the highs, we're retracing. SMT's at the highs. Just tapped in fair value gap. IFEG, I'm entering. I'm in. I'm out. Wait. We're about to sweep 2008 lows. Should find a good entry within the next year.
Alright, a little funny skit showing, the difference between scalpers and swing traders. It's just meant to be comedic, right? It's pretty funny, especially the 2008 lows for swing traders. Obviously, it's exaggerated. The scalpers are not quite like that. Swing traders aren't that slow either. But let's take a look at some of these comments, right? Alright, here's a comment. Scalp and swing is BS. Intraday and day trading is fine. Alright, where do I start with that? Unpacking it. Look, the reality is whether you're a scalper, intraday, swing, or position trader, fine. Right? If you're making money, you're making money. That's all that matters. But scalp and swing trading is bullshit, but intraday and day trading is fine. I mean, it's just, what's this guy on about? Like, he's just talking shit. Again, absolute shit. I am a scalper. I go live every single day trading the Ola Prime prop counts and live on Ola Prime TV. You can see that you can make a considerable amount of money scalping if you know how to do it. Now, granted, scalping is a bit more difficult, right? You got to be quick. You got to be, you got to be fluid with the market. And, that's what I teach here. But I use order flow. I actually use real volume data. I can't stress that enough, right? Real volume data. Actual data from the CME exchange that shows me how many people are buying, how many contracts are buying, how many contracts are being sold. I see the level 2 data. I see the depth of market. I see the time and sales. I see all that information, which gives me a very clear picture of what is going on, and I can scalp in and out the market pretty well and make a decent amount of money, right? Now, if you're just doing it through candlesticks, I kind of agree that scalping becomes very difficult because you don't really know what the hell is going on behind that candlestick, right? You're just seeing a candlestick. A big candle doesn't mean momentum or high volume. You can have a lot of volume in a small candle. You just don't know, right? Unless you actually see the data. If you're trading just candlesticks, you're trading blind. You're seeing 20% of the reality of what's going on, if that. And, you're trying to make accurate predictions, essentially. Of course, you're going to get beaten up in the market almost every single time. Now, if you find some kind of small edge, some kind of particular pattern or setup at a particular time, roughly, alright, you can make it work if you're very disciplined. But that's why most traders become swing traders, right? People or intraday traders, right? They use longer time frames because it averages out and it becomes a bit easier to trade if you don't have all the data. Because you can look at a longer term graph and say, right, well, I'm thinking it's going to continue going up or it's going to go down, right? Just based on the overall structure of the longer time frame. And then if you're patient enough and you wait for the right entry, you have a big enough stop, you have a good enough target, and you're willing to wait, a few days, whatever, you can make money. Absolutely. It's very boring, it's very slow paced, but you can absolutely do it, right? If you're trying to scalp the market on the 1 minute chart with just candlesticks, you're going to get eaten up. It's almost guaranteed. So this is another trader. This is another guy who's obviously done a bit of trading, right? He's got completely eaten up as a scalper, completely destroyed, has no clue how to scalp because he doesn't have the data. And it's not his fault, right? He's trying to win in a market that essentially he doesn't have enough data on, right? He doesn't have the correct data. He's just using candlesticks, maybe some indicators. He's trying to make it work. It's not going to work, right? But give him order flow, give him the real data, and then all of a sudden his eyes will open, and then, you know, you'll understand that there's a reason large institutions, a lot of professional traders on the institutional desk, believe it or not, they're not holding positions. I mean, of course, they have all different types of trades, right? All different types of traders and stuff. So there are, you know, position traders where they do long-term investments. They have all different types of ones. They go all the way from, you know, high-frequency trading all the way up to position trading. But there's a reason why a lot of pro traders are similar in my approach, are scalpers. They may be in for a few minutes, 5 minutes max, 10 minutes maybe. You don't really see traders, you know, on the institutional level doing kind of swing trading, right? I mean, they do exist, of course, but they're more, I'm gonna be careful what I say here, but there's obviously a lot of insider trading as well that happens, and that's just the reality of the financial world. If you believe insider trading doesn't happen, you're living under a rock. There is a lot of insider trading, and of course, you know, there's people who abuse that, but that's a whole nother topic. But, you know, scalping is kind of the preferred method when it comes to, you know, the order flow and looking at the data, because it can only really tell you what's happening in the next few minutes. Momentum can shift quickly, fresh wave of sellers might come in, or buyers or whatever, and the market can change very quickly, the supply and demand dynamics. So, you know, scalping really is the kind of only way you can trade the order flow. But anyway, let's carry on. Here's another one. It's a funny video for sure, but scalping is for low IQ people who can't think ahead. Oh god, I love it when people talk out of their arse. Tell me in one sentence you have no clue about trading. I'm talking proper trading. That would be it right there. Yeah, okay, mate. Okay, J0001. You know, scalping is for low IQ people who can't think ahead. Pretty much what you're saying there is most institutional professional traders are low IQ people who can't think ahead, but they make the most money in the markets. Okay. The reality is you put a scalper up against an intraday trader, a professional scalper up against a professional intraday trader or swing trader, I guarantee you the scalper will make more money. Almost guarantee it. The scalper will make more money. And the reason being, now granted, look, you're only as good as your emotions. You're only as good as your discipline. If you're not following, if you're not being disciplined, you're not closing the trade early, you know, getting out when you're seeing, you know, the momentum shift, when you're seeing the orders going against you, you're not getting out in that second because you got hope. Oh, it might go up still or something. Yeah, you're breaking the rules. You're doing silly stuff. You're not ready yet. You need to work on yourself. It's not the strategy, you need to work on yourself, right? But once you nailed that, once you've got the emotional side and, you know, you're almost robotic with your trades, I mean, just watch us live. Watch me live on Ola Prime TV. You will see it happen live. In a few minutes, out, bang. Within an hour, I'm always banking decent amount of money. How? How is that possible as a scalper? Because I'm seeing the data, and it always comes back to the data. You got people who, the problem with the retail trading industry, right? And when I say retail, I mean, you know, I'm a retail trader at the end of the day as well, right? But the problem is, you have people who believe that what they see on YouTube on some random video about Fibonacci and trend lines is what the industry is all about. I'm going to tell you right now, Fibonacci, trend lines, all that stuff, if you do a statistical analysis, which has been done many, many times, you do a statistical analysis, you'll realize after enough trades, it works out to be about 50-50. It's complete bullshit. It's just you're flipping a coin, right? What actually matters and how people become profitable is because they basically have better risk management than most people. Your risk management is your edge in that respect, right? But you don't actually have an edge as a trader when you're using shit like that, right? And that is the reality, and I'm so sorry if that offends people, but I can't talk about, you know, ICT and fair value gaps and smart, because I don't know about stuff like that. I've never really looked into it. I hear it's a lot of buzz nowadays, but from what I have seen, stuff like ICT, they're trying to predict where big institutional money is by looking at random things. Oh, there's a little gap between two wicks, and that's a fair value gap. And you know, there's a change of character, or there's a break of structure, and there's an order block here, and all by looking at like the most random little things. And what I will say to people who trade like that, why are you guessing? This is what I don't understand. Why are you guessing where institutional money is coming in when you can literally see on the footprint, the depth of market, the order flow, where institutional money is coming in? It blows my mind. It's like me, I don't know, trying to guess how many iPhones were sold in the last year and just making a random guess based on, I don't know, data that doesn't really reflect how many iPhones were ever sold, right? That's me like saying, oh, I have 4 friends out of 5 who all have iPhones. That means, you know, I think there's an 80% chance everyone who has a phone has an iPhone. Therefore, I think 100 million iPhones were sold in the last year. Just you know, using random kind of logic to kind of predict the number, when I can literally just go to Apple's books. It's a public company. I can find out, you know, reports. I have the real data, and I can see, right, that's how many iPhones were sold. Like, I don't understand why people are guessing where institutional money enters the market when you can see it. You can literally see it. It cost about $7 a month. It might have gone up a little bit, I can't remember. But, you know, it's like next to nothing it costs. You can go do it on TradingView. You go get a CME subscription. It's like $7 or $8 a month. It's cost next to nothing. Go to the footprint chart. Boom. You can see all the freaking contracts coming in. Why are you guessing this is an order block? It's probably not an order block. I can tell you where an order block is because I can see it right there on my chart. It says how many freaking contracts were traded. I can say, oh, there's an order block. Do you know what I mean? Like, so look, if you're someone, and I don't mean to offend people here, right? But I'm trying to wake people up to the reality, right? It as a professional trader, it hurts when I see people just talk utter nonsense. In fact, give me a minute. Let me show you something. You want to know about order blocks, where institutional money's coming in? Here's the footprint, right? Oh, look, market started pushing up. Where's the first big kind of bunch of buyers coming in? Right there. Let's draw that out. There's the order block. Look, it retests and goes up. Dead simple, right? Why are you guessing based on absolute bollocks, right? Oh, the order block's got to be, because there's a candle wick. Shut up! Just look at the data. I don't know what you're doing, right? And that's like the easiest way to look at the footprint. There's a million and one ways there's a lot more advanced ways of looking at it where you can get even more precision. Like, I don't use that, what I just showed you there, because it's kind of simple. All right, let's move on to the next post. Trader loses $1,400 in 2 seconds. Right, so I'm just going to pause. He's a futures trader. He may even be using Ola Prime, who knows? But it's Project X. He's got a $50,000 account. He's he's allowed to lose basically $2,000. He's up already. This is probably going to be, this would be, most likely this would be micros. It could be minis, but I'm going to say most likely micros. And he's up 450. Let's see what happens.
Yeah, bro, my account's
Yeah, it's got to be micros because he's put 15 on. Yeah.
Order filled.
All right.
Order filled.
Oh, 50 micros. That's 5 minis. Okay. All right, you see, he got lucky there. All right, he's gambling. Now he's in revenge mode. All right? He's in revenge trading mode. Okay, he's making it back up. Oh, he's really in revenge trading mode right now. He's really in revenge trading mode. This is dangerous stuff. 50 micros. Alright, it's gonna TP, isn't it? Alright, I see what's gonna happen already. Yeah, he's gonna TP. There we go. Back up 1400. Alright, okay. Look, it's a challenge account, right? It's an evaluation, so he's trying to pass it as quick as possible, so he is just essentially gambling, right? He's putting on way too much size. You know, you would never do that on an actual funded account. You do that on a funded account, I don't know what you're doing, right? Like, I'm not actually going to roast him, and I'll tell you why. Because I think he already knows what he's doing. He knows that he shouldn't be doing that, right? That's not how you're meant to trade, right? Proper revenge trading, okay? But, again, it is just an evaluation account, right? It's a challenge account. If he blows it, he pays, $50, whatever it is, right? Okay? And he tries again. And, with that method, he might pass in a day or two. And then he can go funded and then take it super seriously. So he doesn't probably mind paying, for 3-4 blown accounts to get one funded account and then be really strict on that funded account. If that's your method, that's actually fine. I have no problem with that, right? I wouldn't recommend doing that with real money, with, a funded account, of course not. But if you're in the challenge phase and you just want to pass it quickly, so you're going to, add a lot of size to it, you know what, go wild. Why not? If you got the money to buy a few accounts, so it's not that bad. If you mess up a challenge, you could just buy another one, and you don't mind buying 5 or 6 in order to get that funded account. Fair play to you. Why not? Do it. I'm not going to roast you for that, because I can understand where this guy's coming from, right? He wants to just speed up that valuation process and get to the funded stage quickly so he can start trading properly, and disciplined. Now, if he's doing that in a funded account, yeah, that's wrong. Like, definitely don't do that, right? 50k funded account. Look, every prop firm's got different rules and stuff, but I wouldn't put more than, honestly, a micro or 2 micros. Just because if you have a losing streak, right, and you're going to come with a losing streak at some point, there's a good chance, you're going to blow the account. But if you're only trading maximum 2 micros, the reality is you could probably lose 20, 30 trades in a row and before blowing the account. It's very unlikely you're going to lose 20, 30 trades in a row. If you do, there's probably something wrong, right? So you're doing something wrong, right? So you can, and look, I've traded micros before, right? When I started my trading journey, of course, I was trading micros. I did 1 micro, generally 1 or 2 micros at most. This is on a cash account. And, I would make, obviously I wasn't as good as I am today at trading, but I would still be able to make like $100 on the day, right? On average, which doesn't sound like much, but on, if you average it out, you're making, $1,500 to $2,000 a month. That's not bad, right? Especially on a 50k account. It adds up. The small wins do add up. You just got to be consistent in it, right? Now with my, cash account, I trade a lot bigger size, right? So I make a lot more money, right? But, I'm not going to roast him. But, of course, in the comments, most people are just saying, you're gambling, this is crazy, what are you doing? And I ultimately agree with what everyone's saying, right? 100% agree. Everyone is just going in on him on the comments, which is fine, right? Because he would have known that that's going to happen. But it's fine. Look, you do it on evaluation as long as you're happy to understand that there's a high chance you're going to blow it. Fair play to you. If you're happy just paying a bit more, paying a few accounts until you get that funded nice and quick, and then go serious on the funded, that's a strategy in itself. I can't be mad at that, because not everyone wants to spend a month trading an evaluation account in order before they hit and actually get funded. Like, I understand that's long, right? There's not everyone wants to do that, and if you can pass it in 2 days by being a bit risky, and if you fail, you just pay an extra $50 or $100, whatever the price is, and you know, get another one. You're happy with that? Fair play to you. I mean, I'm not even gonna roast you. That's fine. But we're gonna leave it at that. Pretty interesting stuff today. But if you like more of these videos and you want to see more of them, do let me know in the comments. But apart from that, you know, check out some other videos where I break down some of my live trades that I take. And you know, you can see how I trade. Watch me live on Ola Prime TV as well. Link is in the description. But apart from that, thank you guys for watching, and I'll see you again very soon. Take care.